Started in crypto in 2013, went down the rabbit hole in 2017, got wrecked in 2018. There are no market cycles in foreign exchange, or at least we're not taught them. And ever since then, one of my ongoing projects has been systems building to navigate crypto bull market tops so that that never happens again. My simplest exit strategy is the one that I recommend for most people, especially.
Again, just to reiterate, this is what you're expecting is the likeliest way it's going to play out for this market cycle, parabolic top. Is that right?
That's correct. There's really three ways that this cycle could end.
Cole Garner is an analyst, trader, investor, educator, and a builder. He builds tools for markets.
He was an FX trader in legacy markets before getting started in crypto in 2013. He's passionate about decentralized technology as a tool to forward human rights, and he's equally passionate about markets.
In the end, people obviously would be interested in knowing, okay, that's the question that's on everybody's mind. Like, when is the top going to be in with Bitcoin? How do I sell the top properly? What is my exit strategy if I am an investor, if I am a trader? Can you shed some light there as well?
I don't think this bull market is over. I don't think that the top is in. But, and if you're interested, for market professionals, for experienced traders, for folks who've been in crypto for multiple cycles, we can dig a layer deeper, uncover some dynamics that are present in these tops that we're talking about that.
Back with another episode. Less noise, more signal. Great. Today we have Cole Garner on the show. Really nice to have you here with us, Cole.
Good to be here. Thanks for having me.
Yeah, great. You have been or you've caught my attention a few years ago already, I would argue. I've been following you, as many others, for quite some time. And you struck me as someone who has always, really posted interesting metrics in terms of where the market is going and what's the current state of the market. And that's why I actually wanted to bring you on, because I feel like you are a trader by heart, so to say, and you really know what you're talking about. So this is kind of the reason I wanted to talk to you. But maybe if you could quickly introduce yourself, tell the audience who you are and what you do, that would be nice.
Yeah, absolutely. Well, I'll start off by saying that when I'm live on the air, I tend to talk slowly. And so for everyone listening at home, I absolutely encourage you to speed me up to 1.25x, something like that. Got started in markets as a price action trader, trading FX during the global financial crisis. Got started in crypto in 2013, went down the rabbit hole in 2017, got wrecked in 2018. There are no market cycles in foreign exchange, or at least we're not taught them. And ever since then, one of my ongoing projects has been systems building to navigate crypto bull market tops so that that never happens again to me, and ideally to anyone that I know, anyone I'm close with. And at the same time, in parallel, I started building tools for markets, analytic metrics that use an existing need that I couldn't find fulfilled anywhere else. And algorithmic trading systems. I just partnered with an AI engineer on the algo trading side. But I knew others could benefit from the tools. And so I've open sourced several of my best tools since then. And if we have time, maybe we can show you a couple. If not, maybe we can link to them for your audience to check them out. So these two parallel tracks of building tools and building systems, they wound up converging on this project that's been years in the making to navigate bull market cycle tops. And that was when I had an epiphany around the start of this year that if I shared the system, it would dilute the alpha. Even if the system got leaked publicly, it would not impact outcomes much, if at all, for anyone short of whales. And that's super counterintuitive. Happy to talk specifically about why that is. And once I had conviction that I could share the system out, I was consumed right away, overwhelmed with the urge to teach it. So I've been heads down for months, recording a video series explaining all of it. We've been in closed beta for a couple months now, and I am excited to announce that we just launched. It's the Bull Market Top Playbook, live on alchemicalintel.com, and the response so far has been overwhelming.
Nice. Yeah, exactly. Yeah, you hit me up with this as well, and I can obviously just recommend this. I haven't dug into it completely, or I haven't like listened through the entire course, but the way I'm like halfway in, and it's already so much alpha that you're sharing there. That's obviously something I can recommend. And as you said, we will surely link to this. Great. I mean, yeah, the thing that you mentioned is interesting. Maybe we can really start there, because I think there is this law, Goodhart's law, and you might be familiar with it, where it says when a measure becomes the target, it ceases to be a good measure. And I think that's what you were alluding to by saying if you kind of leak the alpha system, then all of the people have the system, and then it ceases to be a system to go by. And you said this is not the case. Can you maybe elaborate why this is so?
Yeah, absolutely. So what we're talking about, alpha decay, it's a very real, legitimate risk in practically any market condition or asset class. But we think this strategy is largely immune to that dynamic. Not 100% immune, not by any stretch, but immune enough that anyone smaller than a whale should not see their outcomes affected, no matter how many people wind up using the system. And that's because crypto bond markets peak in a very unique market regime, a retail mania driven by global mass psychology of inexperienced investors at scale, and a 24/7 torrent of narratives from social media and mass media and popular media. And the combination of all of those has this way of steamrolling its own path forward that is a dynamic that's not present in all other market regimes. And so, how successful my marketing efforts are, no matter how many funds and high net worth individuals use the system, and even if it's leaked by a main character on crypto Twitter, big picture globally, in a retail mania, only a tiny fraction of crypto asset holders will ever see the system advertised, and most who see it won't buy it. And if it's leaked, and in order of magnitude more people have access to it, again, the 24/7 deluge of narratives means that for every investor who uses it, there are going to be tens, if not hundreds of thousands who won't. And that means the signal will literally drown in the noise. and that's a good thing. And then naturally, the next question that comes up is, well, what if it's leaked and then mass media publishes it, and then it's really out there in an order of magnitude bigger way, and that's just not a concern because legacy financial media doesn't publish strategies for navigating markets. It's a major editorial ethics violation. Nobody in the newsroom wants to lose their job. It just doesn't happen. And all of this, it kind of gives the impression that it's win-win all around. And that is not the case. Somebody has to lose here, and that's whales.
Okay, why would you say it's whales? Can you elaborate on this?
If a substantial number of, pick your wildest case scenario, Ansem leaks the entire system. Everybody on crypto Twitter has access to it. The folks who are going to lose out on some portion of their profits at the top are going to be the whales. For everyone short of whales, outcomes would be, if they're affected at all, just barely.
Okay, I see. Yes. Yeah, I mean, now that you have kind of set the stage, by saying, okay, this is the system, and you have like a system that you, as you said, prepared over years, that is really the experience that has flown into your system in its entirety, then yeah, it would certainly be interesting to get some insights into that system. And maybe you can share this with us right now here. So where do you want to start? Like in the end, people obviously would be interested in knowing, okay, that's the question that's on everybody's mind. Like when is the top going to be in with Bitcoin? How do I sell the top properly? What is my exit strategy? If I am an investor, if I am a trader. So can you shed some light there as well?
Yeah, absolutely. If I know you shared with me earlier that some of your audience is crypto curious, that are thinking about investing. They have not yet taken the leap, and it's so important for that cohort of the next generation of crypto holders. There's just a few things that most people don't know about. They don't get told. They should get told. They deserve to get told. And I think that's the possible place for us to start.
Sure.
It's just thing where I'm just a second. Yeah. So we're looking at a chart of Bitcoin from inception, and up until the current bull market. We're not showing the current bull market on screen, just to keep things a little bit simpler. And you can, hang on a second. And you can see the most recent bull market top at 70,000 in 2021, previous top before that 4 years earlier in 2017 at 20,000. And the 4-year cycle that we've seen thus far, why is that? That's a whole other conversation. I'm going to sidestep that. It's not relevant. Is it going to continue like that? Who knows? Maybe it doesn't. that's also a conversation better had another day. If you notice, before that time, before 2017, it looks flat on screen, and uh, that's an optical illusion. If you notice, uh, the little red circle, that's the previous cycle top in 2013. And the lesson here is that each cycle dwarfs all previous cycles that came before it. And it dwarfs it to such a degree that you can't even see it on the chart. And also, each cycle ends in a crash of historically 85% for Bitcoin and 99% for shitcoins, some of them 99%, and then another 99%. That's why it's important to know when to sell. And do we know if them will continue? We don't know. Future crashes might be less severe. But what I want to draw your attention to, for new folks who are considering deep diving into crypto, is that just one little technical thing to know that will be super helpful going forward. The chart that we're looking at right now is it's a linear chart. It's a normal chart. It's the kind of chart you're used to looking at. And if we click through to the next slide, we're now looking at a logarithmic chart. Instead of a linear increase in price, we have an exponential increase in price. And we do that to remove that flat line, so it's much easier to see the 4-year cycle in context. And clicking over to the next slide, we can see that there was even a quick little cycle before 2013. It wasn't 4 years, but that's okay. And clicking to the next slide, what is this yellow curve? It's the technology adoption curve that we have been moving through since Bitcoin's inception in 2009. Going to the next slide, this is how Multimedia perceives the ups and downs of the 4-year cycle. Basically, everybody thinks it's dead until they think it's in a bubble. And then after that, they think it's dead again. And that's good to keep in mind when somebody tells you it's dead. They're not aware.
Exactly. It's this website, Bitcoin obituaries, I think, where you can see like how many times Bitcoin has died, so to say, and it keeps coming back. But that's just interesting that there's even a website like keeping track of these death calls, so to say. Sorry, I didn't want to interrupt, but
No, please interrupt anytime. And it's so true. That's how much of a meme it's become. And so this is how mass media perceives the cycle. And this is how traders perceive it. We're looking at the lows of each cycle, and each low is lower than the low that comes next. And what is a series of higher lows? It's the definition of an uptrend. And that's an important point to take away. And so, when do you want buy? Well, before we get to that, I want to make a point that it is just so important. Maybe 80% of people who buy Bitcoin or crypto for the first time buy within 2 weeks on either side. of a cycle top. And then they get to enjoy the roller coaster ride down, losing 85% or more of their asset value. And
Yeah, that's so interesting as you say this, because again, like, it's exactly the case. Like, usually, when Bitcoin is all over the media again, a lot of people are approaching me and they're asking me, is it now the time to buy? And then you're like, well, maybe it's not the time to buy now, but then they end up buying anyways, because they're just like kind of drawn in and pulled in by the whole vortex of, as you said, the mass media and the mania that's going on. And that's so interesting because if you ask people, just like totally unrelated people, most of the people would tell you, yeah, you have to buy low and sell high. That's kind of the case. But then obviously in reality, this is exactly not the case. What's happening, right?
yeah, that was leading thing that I was going to say. So we're seeing eye to eye. It's it does something strange to our animal monkey brains when when our so the K-pop band is shilling Bitcoin when sports stars and hip hop superstars are telling us that we have to buy the next biggest thing. It's never going down. And of course, that's when it starts to crunch right there and then.
Yeah. And that's certainly something that we have to address later on in this sort of talk that we now have here, because I think that's something I'm discovering right now. We have again a lot of like celebrities, and also this time it's probably also like major politicians. I do live in Switzerland, and right next to our Switzerland we have Germany, and like there was like a discussion going on, a debate, in the Bundestag, which is like the parliament of Germany, and like traditional politicians that would never talk about Bitcoin were actually kind of shilling Bitcoin. And again, that kind of, to your point, it's maybe not a hip hopper like 50 Cent, but it is a politician that usually doesn't talk about Bitcoin. So that's the question. Obviously, I think we have to sort of try to answer at the end or towards the end. Is it now time to sell again? Are we close to the top? So, but just wanted to throw this in here for people that this is something I think we'll have to answer at the end, right?
Right. Before you talk about when to sell, especially if you're curious, fascinated, but you're not yet invested, then it begs the question, when do I buy? Now, the answer to that, we all know you buy when Bitcoin is down 80% or more, but we're in a bull market. So if any of your listeners are wanting to participate in this bull market, there is a very simple way to gauge when to buy in a bull or in a bear. And I'm going to share it with your audience right now. It looks technical. It is so not technical. This is the simplest metric. There's nothing simple about the calculations behind the metric, but how to use it, it's dead simple. So this comes to us from checkonchain.com. It's a great resource. I'm sure we'll deep link to this metric specifically in the show notes. Short-term holder, super, what does that mean? Don't worry about it. Doesn't matter. Here's what matters. In the background, you can see Bitcoin's logarithmic chart. In the foreground, there's green and red. And you want to buy below the meeting point where green meets red at 1.0. So there's kind of two zones that I identify an orange zone and a yellow zone. And UNF1 is your orange zone. And that's where however much you want to invest, I would allocate 30 to 40% under one, and then wait and hope for it to go under 0.97. Anywhere under that, go all in. Will the capital that you can afford to lose. And if you buy under 0.97, you're unlikely to experience too much drawdown.
Interesting. Yeah, exactly. Check on chain. We had James on the show already as well. He's one of these exquisite like on-chain analysts, and I think the graphs and everything, they're from his system. So very nice that you're using them as well. And obviously a great point. That's interesting to know for people, these sort of definite numbers. And yeah, thanks for sharing these as well.
Sure. Yeah. Happy to. So, we know how to buy. And once you've bought it, in my humble opinion, by far the most important thing to know next is when to sell. And that's, it's a subject that is, it's surprisingly hard to find good, organized, helpful information on. There are individual charts that people will talk about. There are cultural memes that are signifiers that people will talk about. And I highly recommend not using any of them. But what there isn't is a course online, free or paid, that's good, or even one that isn't good. I just couldn't find one. And that's when I decided that it made sense to put this together for not just for my friends, but for everyone who deserves to not be a lemming buying the top and then falling off a cliff. It's so important to know when to sell in this market more than any other market that anyone listening has participated in their lifetime. And there are data-driven, highly specific mechanical ways to do that. And I would love to talk you through one of my exit strategies. It's my simplest exit strategy. It's the one that I recommend for most people, especially folks who are not market professionals. And you might be shocked at how simple it is to wrap your head around. And this, I've been talking about how institutions and smart money like to exit parabolic advance. And I should take a step back first. There are two kinds of tops in markets. There's a distribution top, which is the normal kind of top. That's the top that we saw in the last bull market in 2021. And then there are parabolic tops, blow-off tops. That's what we see in extreme bubbles. In traditional markets, they're very rare. That's what we had in the bull market before, in 2017, the bull market before that, 2013. And that's what I suspect we're going to get in this bull market. And it's also the most interesting material when it comes to exiting. We do teach exit strategies for all scenarios. And I'm going to focus on exiting a parabola a blow off top.
Again, just to reiterate, this is what you're expecting is the likeliest way it's going to play out for this market cycle. Parabolic top. Is that right?
That's correct. There's really three ways that this cycle could end. Either a distribution top, or a parabolic top, or a black swan. And a black swan looks like a global financial crisis. And that could happen at any time. It could be starting right now, or this could be a blip on the radar that we're experiencing, and that may not happen for years. But I'd say, gun to the head, 70% chance we get a blow off top, 20% chance we get a distribution top, 10% chance black swan. And of course, everybody knows somebody who predicted the black swan. For them, it's a white swan. Same difference. But I do suspect, because we have the largest asset management firm on the planet and the president of the largest economy signaling a strategic Bitcoin reserve, that there's going to be FOMO in markets globally to a degree that just could not sustain regular normal distribution. It might happen, but I suspect we're going to see real fireworks.
Mm.
And this is the next strategy for real fireworks.
Yeah, I see. Just if I quickly butt in here, but then as far as I can tell, because you're also using the word might happen and it could happen. So that means we're not at this point yet, because I think that's what people would be curious to know. Are we already in this parabolic wave, or are we at the beginning of it, or are you thinking we're already topping out in the next few weeks, or just maybe I'm jumping the gun here, but how would you address this question?
Yeah, absolutely. If the cycle ends in a black swan, then we're topping out right now as we speak. I don't think that that's what's happening, but I could be wrong. I'm wrong all the time. Just ask my wife, she'll tell you. But in a parabolic advance and a blow off top, which we have not yet entered, there are specific analytic on-chain metrics that are inexpensive to access, that we use in our system and we teach to confirm a parabola. So step one in the process, and we're not going to get into this in any detail on our call, but step one in my system is starting from beginner's mind. We need to confirm what market state we've entered into. Have we entered into a parabola or distribution? The answer is neither yet. But when we do, we'll know it because we have specific data-driven metrics with thresholds that confirm either case.
Mm-hmm. Okay, I see. Yes, I see. Yeah.
So, shall I get started with?
Yes, yeah, exactly. Like that would be kind of interesting. Then now, okay, if we know that we have these ways to go by, to kind of assess has the parabolic wave started, and then also has it broken down, maybe even, so how to assess this? I think that would be something people should be or would be interested in knowing.
Yeah, so let's assume that we've met criteria for parabolic advance, a blow off top. We're not going to get into what the criteria is now. That's boring stuff. What next? How do we proceed if we're not market professionals? We're not going to be hyper optimized. We just want a really good exit. And it's a little bit shocking and mind blowing how feasible that is. And you're going to see by the end of this presentation, which takes about 10 minutes, you're going to have a gut sense in your bones for your conviction that you can have and should have, that you'll be able to get out if you're holding Bitcoin within 15% of the cycle top. And let's talk about how that works. So, so the first slide is it's a schematic drawing of a parabolic advance drawn to scale, just to give folks a general idea of the kind of extreme ascent and descent that we're looking at. And so step one, and we're going to make this dead simple. Price explodes higher. How far up does it go? What's the top? We're not worried about them. We don't care. We're not thinking about price targets. Most institutions and smart money take the approach that trying to predict the exact top in a global mania, it's too difficult. It's too unpredictable. And most importantly, trying to pick that top runs the risk that you'll take profits too early and miss out on too much of the rest of the move. This strategy rules that out as a risk. So, step one, the parabolic wave up. Step two, the parabolic breakdown. Now, what's been broken? The hockey stick arc trend line, curved trend line in red, that's served as support for the entirety of the bull market. And for those of you who are non-technical, all support is just the ground floor. So the trend line, that curved red trend line, has been broken. How do we know it's been broken? Well, this next step, it's going to turn your stomach. There's no way to get around it, but you don't have to stress, and you'll find out why in just a second. We know the trend line is broken because all of a sudden Bitcoin is down 40% or so in under 30 days. And if we want to get specific, we could say 40 to 50%. Most folks think that we'll never reach 50% again. So we could call it 35 to 40 in under 30 days. In the last parabolic top in 2017, it took just 1 week. 30 days is conservative. And so there's just no way around it. It's stomach clearing. But this is the rarest special kind of moment in markets. A moment that
Maybe one question, what if, like, because you mentioned it yourself, we have BlackRock, like the biggest asset manager on earth, and obviously now in the market, we have different sorts of institutions. And you said this obviously can also kind of fuel the mania that's something, probably a lot of people would agree with. But could it also be that because we have these institutions, we now have also options, on the Bitcoin ETFs, that this could kind of tame the downside, and that maybe people will miss this parabolic break because they're looking for a 40 to 45% drawdown, and it will just not draw down. It will be a 30% drawdown or a 25% drawdown, and still the parabol will have broken? Or do you think if we are to get the parabola, then obviously we will also most likely have this 40% correction?
In every previous bull, it's been a 50% correction. And in a parabolic advance, markets are so overextended. And at the top, there is so much sell pressure that the likelihood that we don't hit a 35 to 45% range is it's extremely low. That's not something that I'm concerned about. Now, I think the more important question to ask is, will we get another 85% drawdown? I suspect we won't. I suspect we won't have 3-year-long bear markets.
Yeah, that's a great point to make, because I think what some of the people miss who might be skeptical here, in terms of like, yeah, we won't get this 40%. It's really like, yeah, if the upside is so unstructured, and so chaotic, and I probably would argue that a parabola or a parabolic wave is obviously quite chaotic, then the things on the downside will also be quite chaotic, which means a 40% could easily happen, If on the other hand, we have like the market just slowly moving up and never even entering a parabola in the first place, then it's a lot more structured and orderly. And then probably on the downside, we might get something like the distribution that you were talking about, a sort of distribution top. But if we get the parabola, then these 40% is probably, it's within the ballpark of 40% is a good indication as you're laying out here. So that's something I certainly find interesting. Yeah.
Exactly. And this is a really important distinction to understand, is a parabolic advance, a blow off top, that happens in a bubble. That happens in a global mania. Now, just because an asset is in an asset bubble does not mean that the asset is valueless. It just means that it's very overbought. And the proof is in the pudding, in the charts that we were just looking at a few minutes ago, of cycle after cycle of higher lows. All of those were bubbles. Even though Bitcoin is the soundest money that's ever existed.
Yeah, exactly. Nice.
So, okay, let's get back to how to exit in a parabolic advance. We have the breakdown of 35 to 45%. And step 3 is the complacency shoulder. That's it's a technical term, but it's also a term used, applied to market sentiment. Complacency, it's the opposite of analysis. And analysts famously, and it's just human nature, that in euphoria, we tend to forget that we have to keep our analysis front and center. complacency shoulder is a crucial dimension of the strategy. And so when we've had the parabolic wave up, the parabolic breakdown, and we're down 40%. So what do we know? We know we're down 40%. We also know the top is in. How do we know the top is in? Because we're down 40% in under 30 days. We also know what price the top was. We then calculate 15% below the top. And that's our sell price. And that kind of begs two obvious questions. One is, why 15%? And the other is, if institutions and smart money are no longer buying, who's going to push price up to 15% below all-time highs? So we'll start with the second question, and the answer is we're in a global mania. Bitcoin and crypto are on the news in 200 countries. Your TikTok influencers and Instagram celebrities are shilling it, and sports stars, and short of a black swan happening at that moment, you can count on retail mania to push price back up to that 15% level with a degree of certainty that we almost never see in financial markets across any asset class. And if I were hearing this, I'd say, okay, that sounds great. How do I know? Show me the data. Let's talk about 15%. And to be very specific, it's 15%, give or take 1%. And so we're looking at Bitcoin in 2017. It came to 14%. No, less than 15%. That's fine. We've got no problem at all with less than 15%. 17, it was 14%. The previous blow off top, 15%. Gold bubble of 1980, one of the greatest parabolic advances in our lifetime, 14%. Dot-com bubble came to 16%. There was no parabolic advance produced by the global financial crisis, but the Asian financial crisis, the Nikkei, 15%. How about individual stocks? NVIDIA, 15%. Tesla went all the way to 8%. Broad Vision, who's Broad Vision? Oh, I've never heard of him. 14%. 3D Systems, also never heard of them. Parabolic blow off top in 2014 went to 15%. Ethereum, 1 month after Bitcoin, in the 2017 bull market, went to 14%. We see this figure over and over and over. It's one of the most remarkable, consistent patterns across all financial markets that I've come across in my career. So then there's an obvious question that the savvier listeners that you have are going to be asked, or they'll have it in the back of your mind.
Yeah, exactly. What if you get front run? Now that it's 15%, like the smart people will just like below your sell order set their sell order so they get kind of executed on and yours not. So how do you make sure you're not getting front run on this, right?
And the answer to that question is we are going to front run them. And I teach how to do that using order book heat maps. And the technicals of that we don't need to get into. That's boring stuff. If you take the course, you'll learn how to do it. But the point is, we can see exactly where their sell orders are, and there's no ambiguity. And once we see their orders, we know where to place ours.
Yeah, exactly. What type of exchanges would you be using for this? Is it like the top major exchanges that you would be looking at, or like what's the best way to approach this?
Yeah, we would be looking at Binance, Coinbase, and Bitfinex. Those are the three exchanges that this is, and all three will probably have the same block of orders at the same levels. You could probably get away with just looking at one, but just to be sure, we look at all three.
Yeah. Some people might be asking why Bitfinex, like Coinbase and Binance. Obviously, everyone sort of knows today, but I think Bitfinex is just interesting because it's sort of considered the OG whale exchange. Where a lot of Bitcoin whales are obviously maybe also buying or offloading their coins. So to me, it makes total sense to also check Bitfinex because, it's been so influential and probably still is, at least when it comes to whales using an exchange, right?
Well, and it's not just whales; it's the whale, the most well capitalized entity in crypto is not BlackRock; it's Tether.
Yes, exactly.
And eventually BlackRock will flippening Tether, but Tether is and this is a subject for another conversation on another day, but I cannot emphasize enough how much control and influence Tether has on price action in Bitcoin and across the board high cap altcoins. They are the dominant force in crypto, more so than any single TradFi institution at this point.
Interesting. Yes.
So, and if you're interested, for market professionals, for experienced traders, for folks who've been in crypto for multiple cycles, we can dig a layer deeper and uncover some dynamics that are present in these tops that we're talking about that I've personally never heard anyone talk about or seen written about in any context that it changes the whole way you think about a blow off top. And I think that your more experienced listeners would enjoy hearing about this stuff.
Yeah, exactly. Yeah. Have a go at it. It's certainly interesting for sure.
Cool. Well, let's get started. So we're looking at a type of normal distribution. Actually, hang on just a second. Yeah, so This is not the cycle top in 2021, but it might as well be. The two charts are strikingly similar. If you see some green horizontal lines in the background, it looks a little matrixy. That's because it's an order book heat map. Please ignore that for the purposes of this exercise. Just pretend it's a regular chart. So, and we're now exiting the realm of stuff stuff that people who aren't market professionals, skilled in at least a little bit of technical analysis will understand. And with that, we'll dive in. So this is, it's obviously a head and shoulders, but it's so much more than that. It's also a Wyckoff distribution. Wyckoff was a market analyst, active 100 years ago, who uncovered this schematic and a few others like it. It's an archetype of how price action tends to unfold at market tops in normal distribution. And it's a little bit easier to see if we draw support and resistance there. And it's archetypical across risk markets as a path through distribution. And I'm going to follow on with a concept that I haven't seen taught anywhere before. It's something that I came up with myself. You may, as a market professional, have your own name for this distinction. You may know this intuitively yourself. If you don't, then I think this will transform how you navigate market tops for the rest of your career. This is critical stuff. So we're back to looking at that chart of distribution, and in every distribution event, there's the top, but then there's also a second top that's the end of the run. And what do I mean by that? Of course, the actual top has to be the end of the run by definition. Actually, for days or week leading up to the quote unquote end of the run, price has been basically up only. From that point forward, at the end of the run, price essentially goes sideways throughout the distribution process until it's finished. And the end of the run is your Wyckoff buying climax up here. And it's not the price top, but it is the volatility top. It's the top on volatility. It's almost always the top on volume. And it's typically the top on liquidations also. And as you can probably see, there's a third circle missing. Oops, I got ahead of myself. Here's the top on the Wyckoff distribution chart. And here's that third cycle. Party's over. This is where distribution has met its end. If there's an alt season, that alt season is in progress, where that circle is located, and there's probably a meme coin blow off top happening in real time. And if we apply that to our Wyckoff, we can see that there. And this happened twice in the last bull market, 2020 to 2021. At the top in May of 21 and in October of 2020. It happened twice in the bull market before that, in the spring of or summer of 2017, and then again in the fall of 2017. And if we focus in on the concept of a volatility top, it turns out that parabolas, parabolic advances, blow-off tops, they also have a volatility top. So looking at them side by side, our beginners can see what a dramatic difference we're talking about, why this is so important to distinguish between the two. Here's a chart of Bitcoin in 2017. The crosshairs are lined up over the absolute top, and we can see here the volatility top, and notice that the volume underneath that volatility top is the highest volume print of that bull market. Going back to the bull before that, 2013, there's the volatility top, there's the volume, and Ethereum a month after Bitcoin in 2017, January 18, there's the volatility top there. You can't see the volume on this chart. And zooming in on 2017, because it's a great example. There's our volatility top, but that's not where it stops. We see the same archetypal distribution playing out in parabolas that we do in regular normal distribution. And this is what I was talking about, a distinction that I've never heard anybody bring up. And I'm excited to educate your listeners about this, because this helps navigating a blow-off top. It's a huge advantage to understand this framework in advance. There's your 15% point, and let's look at the other parabolic tops. Ethereum a month after Bitcoin, it's the same. And the previous cycle, Bitcoin's parabolic top in the end of 2013, that was a double top. Doesn't matter, still fits the model. And this next chart of the rainbow indicator is one of the tools that comes with our course, which identifies the volatility top so that you know the very first moment, the first day that distribution, whether it's parabolic distribution or regular normal distribution, you know the very first day that it's in progress.
Mm.
So the structure is archetypal across all risk markets, and it always has been. And just that awareness alone will make such a difference to anyone with an experience navigating price action. If you have just a little bit of technical analysis under your belt, I think you can really benefit from that one distinction alone.
Yes, yeah. Well, Cole, thanks a lot for taking us through all these slides and giving us like these tools to also try to navigate ourselves, how to play this. Obviously, as you said, there's a lot of known unknowns and maybe even some unknown unknowns, but obviously, it makes sense to. My dad has this saying, where he says, to know what you're going, you already have to been there once before, and that's exactly what we're doing here. We're trying to go through all the eventualities and what could be happening. And obviously then if you have the tools, then you can kind of sort of prepare yourself for either development that could be coming our way. But maybe just to finish up now, if you want to like concretely tie this into the current market, what is your feeling? As you said already, I think you're believing that there's going to be some sort of parabolic move, which is still ahead of us, probably in 2025. What is your feeling? Is this going to happen in early 2025? Will it be extended and we'll see it only later in 2025? And just because, as I already said in the beginning, the last few weeks there have been a lot of signs and signals that were already close to some sort of top, because as I said, politicians have been sharing things around. Michael Saylor has been uber bullish and other people. So what do you make of all of this and how do you prepare right now? That would certainly be something listeners would like to go away with.
Yeah, there's a lot to unpack here. And what I would say first is that as we progress through a bull market, especially the stages of a bull market where it's moving fast, where we've broken the last cycle's all-time highs, we're in uncharted territory, we're in price discovery, there will always be at least one moment in every bull where a major correction coming on terrible fundamental news gives us the just in our bones belief that it's over, and that is by design. There is it is in the best interests of the most capitalized entities to promote news stories that get people scared so that they'll sell their coins so that those most well-capitalized entities can buy them at a discount. And that might be what we're seeing here. Now, we've seen a lot of top signals, and a lot of them are they're what I consider meme top signals. They're magazine covers with Michael Saylor on it, that sort of thing. That it's a cultural signifier, and one of those meme top signals will always be right. We won't know which one in hindsight. And if we try to follow all of them, there's you may recall the famous, hilarious New York Times article with the two crypto bros with the Bitcoin and Ethereum sweater. That was it's like
2017. Yeah, exactly. I remember that.
Top signal that everybody loves to use as an example. That article was published 27 days after the top. You would have given back 30% of the profit that you held through all of that bull market turmoil to achieve. So it's really important that the signals that we use are data driven, and we've been getting a very different kind of set of signals currently that have led up to the correction we're in now, and those are global macro signals of maybe it's what we'll look back on as a nothing neighbor, a quick shakeout, or maybe it's something much bigger. And my own personal recommendation to everyone is don't assume that it's a quick correction, the bottom, and then resumption to new all-time highs. I do suspect that that's what we'll get. I don't think this bull market is over. I don't think that the top is in. But if this is a global macro driven, well, it is global macro driven. If it's the start of the next global financial crisis, it's guaranteed to happen at some point in the coming years. It could happen next week, or it could happen 5 years from now. But there are some signals in the marketplace that they're a little dicey. And so now is not the time to be all in on Solana meme coins and in leverage longs.
Yeah.
Now is the time to manage risk.
Yeah, exactly. Especially since we have moved up like significantly year to date, and then it obviously makes sense, especially like institutions now that we're at the year's end, that some might be taking chips off the table, and really securing some profits. And yeah, even exactly, if you are probably doing this, it makes sense to manage risk and every now and then scale out of the market, just kind of, secure some profits. But what I like about your approach is really like this data-driven approach, and I think the course that you were taking us through, it's really this course that you came up with. We will link to it in the show notes. I can only just really recommend people checking it out, because there you also help people with like really one-on-one stuff, or really simple stuff like setting up alerts, because then you can, sort of be prepared, and you have like the data that is coming your way and is kind of informing you, because as you said, we are in this uncharted territory, and then it's always really hard to kind of pinpoint where things top out, because it's just not possible, as you really eloquently explained. So Cole, I think we've taken over an hour. Thanks a lot for doing this. You told me that you usually don't do these type of interviews, so I'm very happy that I was able to bring you on, and maybe in the future we could do this again and then go even deeper. And as I said, for all the people who want to get in touch with you, I think they should check you out. Where can people connect with you? Any thoughts on that?
I'm on Twitter at Cole Garner's Take. And you can also find the course and the strategy at alchemicalintel.com.
Great, cool. Yeah, thanks for pointing this out. So I don't want to take up more of your time. Thanks a lot for doing this, and have a great Friday. It's a Friday that we're recording this, and then enjoy the weekend.
Thank you. Thanks for having me.
Thanks, sir.